I remember one of my investors called me and he's like, I see you guys publish this impact report and you're planting, native pollinator habitat. How is that helping my investment? And I was like, well, let me tell you.
Coming up, we're talking to the managing partner and co-founder of Agriculture Capital, Rob Hurlbut. This week, we're talking farmland investing and regenerative farmland investing. This is something we've heard a lot about. Basically, the idea, take farmland, make it regenerative, and make money, right? But we have seen a lot has happened over the past several years in farmland, in the farm economy, what's going on with regenerative. And we get into the details with Rob. What's worked? What hasn't? How have they been successful over a 10-year time horizon as a notable farmland manager in agriculture? And one of my favorite stories, we talk about how they came up with Agriculture Capital and got the domain agriculturecapital.com. So good. I love domains. You guys are going to love this story and I think learn a lot from the conversation with Rob. Let's jump in, but first, a word from our sponsor. The Modern Acre is presented by Corteva R&D, the research and development engine of Corteva Agriscience. Corteva is a global pure-play agriculture company that combines industry-leading innovation and high-touch customer engagement to deliver solutions for the world's most pressing agriculture challenges. Corteva's global R&D teams are dedicated to advancing science and technology for modern agriculture, tackling challenges like climate resilience, pest and disease pressure, weed resistance, and sustainable productivity. Through world-class research, Corteva R&D is pioneering solutions to shape the future of agriculture. Their robust pipeline is laser-focused on delivering differentiated products and lasting value to help farmers grow and protect their productivity now and in the future.
Well, it's hard to not have a very busy top of mind given the world in which we're living. And I think from my perspective, the more I think about the opportunities for regenerative agriculture to really drive farm profitability, the more excited I get around the changes that we need to be incentivizing in our food system. I think it's been a trend that's been going for a long time, but every day I look at what is a more challenging market for farmers to be succeeding in. It becomes, a real burning bush. We need to make a change to the way we're doing business. And that imperative is just becoming, it's a big opportunity. It gets me excited. And I also think we just have to move faster. And part of that is, creating economic incentive to drive that change. So that's really what we're focused on. And, every time I pick up the paper, it feels like that becomes more important than it was yesterday. So that's what I'm excited about.
We're super excited to dig into this topic with you and the business and everything. Let's start with a little bit more about you, Rob. Tell us a little bit more about yourself and what got you into ag.
It's actually, it's hard to believe it's been 40 years since I started my professional career, which began trading commodities and coffee in particular. I was trading coffee and cocoa futures and options. I did that for about 7 years and then went to work for one of my clients, which was Nestle, managing the risk portfolio for Nestle. And for the first time, I realized these are not financial instruments. These are things that are connected very directly to people's livelihoods and people's health and nutrition. I spent a lot of time in that role, traveling around growing regions, meeting with growers all over the world who are supplying coffee. And I was totally changed my understanding of here I was making these decisions generally about how little I could pay for a commodity, and seeing firsthand the impact of those decisions on the ground was quite eye-opening for me. And over the course of my time with Nestle, which is, obviously the biggest food company in the world, but also, some amazing people there and some great talent. I learned a lot about, the food system, how it operates. I ended up managing a business there, the non-dairy creamer business, and realized, there are real opportunities to rethink the way our food system operates. That I think can improve livelihoods for farmers as well as nutritional outcomes for consumers. And when I think about the two ends of that supply chain, that's really, what for me drove the next part of my career, which was I partnered with a guy named Bill Nyman to create Nyman Ranch, a natural meat company. I was CEO there for 9 years. And created the brand, really developed the pork business, which even today is still supporting over 600 sustainable family farmers in the U.S., providing, incredibly high quality pork, getting paid premium prices for that work. Also, we put in place a floor pricing so that farmers would never get paid below the cost of production. And we connected that to these outcomes that were, consumers who, were willing to pay premium prices for better quality meat. And also realized that, we could, in so doing, have a huge impact on the landscape. So, when I think about those farmers, by and large, they're farmers who were very early. In fact, their grandfathers or great grandfathers were practicing regenerative agriculture. They had continued on with that practice of a 4-crop rotation, using cover crops, having livestock on the field. And the livestock that they were producing were, traditional genetics that carried more. They had frames that survive well outdoors in harsh climates. They would be rooting in the soil, really integral to this whole system that today we talk about as regenerative. 25 years ago, when I started that, it was sustainable family farms. That was the description. Now we've got more words for it. Really, I'm very excited that business continues to thrive today. It's owned by Purdue, the chicken company, and they've done a lot to, I think, adopt many of the practices that we developed throughout their protein business. And I'm really, proud to have been part of that effort. I then, after selling that company, started another company called Attune Foods, which was we actually developed the world's first probiotic chocolates. This was, 15 years ago, or no more than that. God, I'm getting old. 17 years ago, and grew that business, acquired some cereal businesses. We actually grew into more of a digestive health platform, and we're very focused on organic and regenerative cereals. We acquired the Erewhon brand, which was the first big organic brand in the United States back in 1965 when it was founded, and grew that business and ultimately sold that company to Post Holdings, where they, continue to manage those businesses going forward. The big eye opener for me, or the challenge that led to the creation of Agriculture Capital, was this sort of the realization that despite all these things I've been doing in food, we weren't seeing a change in the landscape. The number of organic acres actually today is still the same in the United States as it was over 30 years ago. That's feels shocking to me. And why is that? What's going on? Why are we not seeing people adopt new practices to address what is a big consumer growth opportunity? And part of it for me at the time was, well, maybe it's a capital problem. Maybe we aren't seeing, capital support new ways of farming and transfer risk. And so that was the basis of starting Agriculture Capital 12 years ago. And when I co-founded the firm, the belief was, if we did more of kind of what I'd done historically, focusing on, consumer opportunities in agriculture, focusing on doing it at scale that could meet the needs of a highly consolidated retail customer base, doing it in a vertically integrated fashion so we could control quality from the beginning to the end, and focusing on regenerative, we could lower the risk and improve the total return in that opportunity. And so that was the genesis of starting AC. I apologize for what's a very long-winded storyline of my last 40 years, but over the time, we've now deployed a couple of funds. We've stood up a few really important verticals that are growing very quickly, and really excited about, most importantly, the impact we're having, but also, the incredible team I've had the good fortune of traveling on this journey with. So
super cool background. The perspective you have over these 40 years is impressive. Excited to jump into Ag Capital. I feel like we could do a dedicated episode on every chapter of your story, but we'll, in the interest of time, we'll jump around a little bit.
Thank you for skipping that, Tim.
No, I think your point about kind of like a lot of people that work in agriculture, consumers are disconnected from the actual like farmer that's producing that food when you're trading commodities. Like you're thinking about dollars and cents and volumes. Like I worked in the produce industry, and like you're thinking, how many loads, how many cases, and you're just totally kind of disconnected from the actual farm that's producing that crop that you're selling. So I think having that perspective and seeing an opportunity of white space to really go solve that need and kind of bridge the gap is super interesting. You obviously talked about starting the fund and starting more in vertically integrated businesses, kind of like rolling up grower packer shippers. I know that the SunTreat deal was a part of that, and the Sumo Citrus I think was a big success story of kind of building a category. So maybe just talk us through kind of the strategy with the first fund, and obviously being kind of a new fund manager, you had a really good track record going into Ag Capital. But how did you go about kind of raising the first fund and getting it going?
This is, now 12 years ago. And the idea of vertically integrated agriculture and investing in that space was not something that people had adopted. So when we went out, we were talking to largely pensions, so large pools of capital. And we feel very privileged ultimately to be stewarding capital on behalf of, teachers, firefighters, and other public employees around the country to preserve and grow their retirement investments. The audience was largely focused on the farmland part of the equation, because farmland, as you guys know, has a long-term history of steady appreciation. Obviously, there are regional ups and downs, but in the United States, it's been about 4% a year over the course of the last 50 plus years. And our thesis was if we invest not only in the farmland, but we improve its quality by investing using regenerative practices to mitigate our chemical use, build biodiversity, encourage water conservation. Ultimately, the value of that land will grow more quickly than a piece of property where you didn't follow those practices. And I think we get a lot of traction with that idea. Really, the idea of adding alpha is to what is a very, most people would say, boring commodity, owning farmland. But our view was, no, you can really change the way that farmland will perform by making it ultimately more fertile over time, more resilient to climate change, and its productivity should increase such that you'll get higher yields and more cash income. Therefore, the value of the land should be greater. And we have been pursuing that idea since then. We've raised and deployed about $850 million across two funds, and acquired about 29 different SPVs. Most of those, we call them as special purpose vehicles. They're actually were farms, and in a few cases, as you mentioned, processing businesses that we have then effectively assembled into a couple of big crop verticals. So we are now the largest grower of organic blueberries in North America, and we process that fruit on both a fresh and frozen basis to deliver it to customers from, Costco to Safeway, Albertsons to Trader Joe's and most major retailers on a frozen basis. We also work with partners on the fresh side of the business to supply them with organic berries. All of the big brands that you can think of in the berry patch are customers of ours. We also have developed a brand ourselves called Betterful that we're starting to see some real interest in, because we're now regeneratively organic certified. So rock certified on our business, which, a lot of retailers are beginning to lean into as an additional accreditation that they think as consumers are resonating to. And then on the citrus side, as you mentioned, we acquired SunTreat. SunTreat had done some pioneering work on bringing in budwood of the Decapon variety. We were really interested in that. And my bias coming out of very much of a consumer landscape was, well, this product is really, like organic blueberries, is highly differentiated. It actually looks so different. Most people are like, what the heck is that? I don't know if I can eat that. It tastes extraordinary, and it has unique properties of being very easy peeling, so super convenient. Seedless, which is a quality standard that consumers clearly resonate to. And we have technology that we've invested in to ensure that every piece of fruit you buy is going to be sweet and have the right balance of bricks and acidity, so that it'll be a very consistent eating experience. And that idea of building thinking about produce as a consumer packaged good is really the idea. I mean, it came from, sort of my bias around what my experience at Nestle was. You have to execute on that every day. You spend enough money to try to acquire a new consumer. If you can keep them by delivering on that expectation every time, that's great. Now, obviously, it's hard to do in produce. But we've made significant investments across both of these verticals to ensure that we're executing on that. And the result has been that farmers, our own farmland, as well as other farmers that we support as outside growers, are seeing returns that are extraordinary. And we're really driving a lot of wealth back into communities as a result of having made those capital investments that allow us to execute on that vision.
Rob, I'm going to give you an easy question and then a harder question. And hopefully the
Okay.
I'm excited about the easy question. I'm excited about both. Let's be honest. The first question is, do you have a story about acquiring the agriculturecapital.com domain? Was it just available? Did it cost $2? Or, I mean, I love domain stories. So I'm curious if there's something behind that.
Well, all right. That's a silly story. First of all, it is the most boring name for a firm that you could possibly come up with. So, and I've joked about this for so long that, it's like, yeah, it's about, what do you do? Oh, I work at Agriculture Capital. Oh, what do you think we do? And we do so much more, and it could have been so much more creative. But of course, as we got into it, that domain was already owned by somebody else. So, to your point, Tyler, yes, it became a little bit of a story. So we had agcapmanagement.com, which, was like, oh my God, that doesn't exactly flow off the tongue either. And so we did end up negotiating with the owner of agriculturecapital.com to purchase the domain. And it was not that expensive. So we decided it was well worth the effort to do that, to avoid subsequent confusion. And there are about 10 different firms that have some variation on agriculture and capital. And so it just, in spite of that effort, it's still a very confusing landscape. So we probably should have gone with, betterinvesting.com or Great Farmland, or who knows what. There's so many things we could have done and just called it Jimmy Smith. I don't know, you name it. Needless to say, we went with the obvious choice, and we're sticking with it.
I go back and forth on this topic of, like, sometimes it's like you want the creative, really, really outside of the box creative name, and some other times you just like, sometimes I'm like, should we have just named our podcast the Agriculture Podcast? Because from an SEO perspective, like, maybe you would get more reach. Maybe there's the Agriculture Podcast out there, but I think there's pros and cons to both. But I like.
Well, it's so funny though you say that, Tyler, because in the end, what's become very true for us is I think we've grown into the name. And when we think about where we're headed in the future in terms of our next fund, we've realized that one of the big issues for agriculture is capital. Like, it sounds stupid because it's so obvious, but why do farmers what farmers are renowned for being risk averse appropriately. You get the cycle time of an annual decision and planting process that leads you to, take very few risks because you just don't get a lot of swings in the plate. And the role that capital can play in helping accelerate those transitions is really fundamental. And when we think about regenerative and we think about how to drive regenerative changes in farming systems, a lot of it is about how do we bring capital to agriculture to encourage that risk taking. One of the things we did in our first funds, we actually invested not only in California citrus, but we also made investments in Australia, where we have 3 farms and a processing business that is sort of a miniature version of what we've done in California, so that we can double our cycle times and drive innovation more quickly. We also can address an Asian market because of Australians' proximity and its southern hemisphere, so we can bring fruit in to the U.S. Counter-seasonally. But the real benefit is, that we, by investing that capital, we've doubled the number of insights that we're getting on making regenerative transitions. Some of the cover cropping strategies in citrus that are done in Australia are radically different than anything you see in California. And it's great. So we know we can do it. Can we do it everywhere or not? How do you do it? All of that learning has come, and the reverse has happened. We've done, pruning techniques and all these farming technologies that we've applied here. We've been able to deploy there as well. And it's really been a huge advantage for our team because they're able to unlock, ideas that and get proof points that would have taken twice as long. So agriculture and capital were tied together through those investment strategies. And going forward, we think that's a really big thing we can do now. There are a lot of people today who understand regenerative farming who lack the capital to do those kind of things, like unlock, do more experimentation, take on new technologies, access more farmland. That all takes money. And we think that's really what we want to focus on, because our mission is all about growing the number of acres that are regeneratively managed. And anything we can do to support that is consistent with why we come to work every day.
Well, I'm glad I asked the question. That was awesome. All right. So my follow-up question, you spoke, I think we've heard this now a lot in the industry, is this high level thesis of let's go buy farmland, let's transition it to regenerative or organic. The value will appreciate because now the soil is healthier. And the idea is also then the farmer can become more profitable. They're reducing inputs, et cetera. Is this working? Like that? I feel like that's a very, like, everyone can get behind that. What are you seeing on the ground of, like, let me actually ask it a different way. What has been like the challenges to that happening? Have there been challenges? Because I think it's easier said than done is my guess.
I think you're right. I think the biggest challenge is time. It all takes time. Now, this does not happen in 1 year. It doesn't happen in 2 years. It doesn't happen in 3 years. We've made our first investments, 11, almost 12 years ago now. And we've been tracking on those farms and on all of our farms, we've been tracking over 140 different measures on farm to understand the impact that we're having. We didn't actually know at the beginning what was going to happen, but we knew if we didn't measure it, we'd have no idea what did happen. And so, we've seen, and we've done a lot of things that clearly haven't worked, and we've done some things that have worked really well. We've invested in some technologies that have been successful and others that have not done what they were reputed to do. So, and as we just talked, you only get one swing at the plate a year. So, an example of things that we know have worked well is we, planted native pollinator habitat across all of our blueberry farms, in large part because we wanted to mitigate the risk associated with colony collapse in European bee operations. And we realized that, when we were bringing in bees to pollinate our blueberries, those same bees had been working on almond pollination for, months before. And they were pretty exhausted, and they really weren't doing the job as well as one would hope. We also realized that because of the nature of blueberry flower, the way it kind of angles down, for European bees to get in and get the pollen, it's actually more difficult than for other native pollinators. So we worked with the Xerxes Society to figure out what the right native pollinators would be to plant on farms to create a permanent base of pollinator habitat so that we didn't have to rely as intensively on bringing in outside bees to do that work. And, over the course of, 7 years, we've seen over a 600% increase in species biodiversity on those farms. That's above ground biodiversity. And that has meant, we've seen fewer pest pressures because we have a lot of good pests as well as the bad ones, and we're getting more balance in those systems. But from an economic perspective, we think we've seen, and we do a lot of field biology and on our farms as well as some others to do some baselining work, but we think we're seeing about a 10% improvement in yield related to that pollinator investment, which is pretty significant. and it's turning, basically the reality in terms of how that works is that native pollinators are out flying around and pollinating at a much broader temperature range than European bees don't leave the hive until the temperature gets to the right level. Whereas native pollinators are out flying around and pollinating at a much broader range. And particularly in the Pacific Northwest, where we have some of our larger farm operations, we've had a lot of very cool springs that have, right when the blueberries are flowering. And if the bees aren't out flying around, you see a big hit to yield. And so having the native pollinators then has been really important. That's one of, myriad of benefits, but that's been a very successful experience that, we can measure, we've been tracking, we've seen the outcomes, and, we know the results, but it took 7 years to actually be like, oh yeah, that was a good idea. I remember one of my investors called me and he's like, I see you guys publish this impact report and you're planting, native pollinator habitat. How is that helping my investment? And I was like, well, let me tell you, we read this study out of Michigan State. They'd done the work. We've talked to the Xerxes side. We laid this all out. Our expectation is that over time, we're going to see improvements in yield. And he was like, okay, and I could sense his lack of belief on the end of the phone. But it gives me great pride to now be able to go back, and thanks to the work the team has been doing, and Wood Turner, who my colleague, who's been really spearheading a lot of this work, has done an amazing job, not only measuring but reporting on these outcomes. We can point very clearly to like that investment, and is absolutely critical to driving better economic outcomes. Not only has it been, but will be in the future for many years to come. So those are the examples that I love to talk about because I think they're pretty profound. But there are plenty of cases where things haven't worked as well. So,
Rob, can you maybe talk us through kind of investor sentiment and psychology over the past 12 years? You've been at this for a while. Obviously, the markets have shifted pretty wildly over that 12-year period. Have you exited the first fund? Is it a 10-year fund? And like, what are investors looking for now versus what they were looking for 10 years ago?
Yeah, good question, Tim. I think the reason people invest in agriculture is for the reasons I articulated before. It's very steady. It's a non-correlated asset. It's inflation sensitive. So there's a lot of good reasons to put money into farmland. We have not exited. We've extended our first fund, and continue to see improvements in performance that we're excited about. One of the reasons that I think investors have been perhaps cooler on agriculture recently is that it's become clear that regionally there are some major cyclical factors that you need to be aware of. California had been on a 15-year run of up and to the right in land pricing, and big institutions have been active investors in that space. As you guys are aware, the almond business in particular, we've got 1.6 million acres of almonds planted in the state of California. A big percentage of that is owned or has been invested in by institutions who liked it because it had low labor requirements, it consistently, strong pricing, yields were terrific. And they're like, oh my God, this is great. What could go wrong? Like anything. They planted a lot more almonds than consumers were interested in consuming. And the business has gone through 3 very challenging years, which has, I think, cooled investor appetite because it has no longer been up and to the right, and land prices in California have suffered accordingly. So, I think investors today, if you're looking at the space, and this is true probably it's been true as long as people have been farming, the biggest risk you have is concentration. If you're a single farmer and you're farming one farm, if climate factors affect that one farm, there's not a lot you can do to offset that risk. So if you think about building an agricultural portfolio to provide that steady up and to the right 4% a year plus an average of 4% income every year, the only way you really will achieve that is by having a broadly diversified portfolio that includes not only California farmland, but, exposure to every region in the country, and for that matter, in other regions in the world, where you can mitigate the climate risk that you're undertaking. And I think also capture a lot of the benefits from sharing information among these regenerative transitions to speed those, to drive better outcomes on those transitional opportunities, which is fundamentally the way we think about this. Like adding alpha to those farms, whether it's pollinator habitat or composting strategies or, cover cropping or biological applications instead of chemical fertilizers. The list goes on and on. It's probably, and it is endless. As I know you guys have talked in your podcast before, so many technologies to deploy. Figuring out which ones are the right ones to use on which farms, ultimately is how we're going to see better outcomes and see those numbers that, Tyler, you mentioned, like, how do you really reduce costs? How do you really drive yields? How can you capture that, doubling in profit that, Boston Consulting Group, points to on their 780 acre Kansas wheat farm? Like, those are really compelling numbers. You're like, oh my God, that's incredible. What business would you not invest in where you could double your profit? Like, everybody in the world should be doing that, right? It's not that easy, as you guys point out. And I think what we want to try to do is make it easier, make it more reliable by gathering more information, sharing that information, and then making sure that the best operators are getting access to that capital to drive that transition. So it's, that's sort of the systemic way we think about the opportunity going forward. 12 years ago, we went out to find regenerative operators to try to do our vision. We couldn't find any. So we ended up building, this whole business ourselves. Like, we have almost 500 employees now, out of our Fresno headquarters. They're amazing. We have an amazing team. I'm so honored to be working with these guys, and women who are, doing incredible work. But it was really out of necessity then. Today, there's a lot of great, we're seeing such a, you guys probably have seen this data. For the first time 2 years ago, we saw a downtick in the average age of a farmer in the United States. In my career, it had gone up every year. I think it had been sort of plateauing around 58 or 59 years old. I'm scared to say I'm now older than that. But for the first time 2 years ago, it started to come down, which is really exciting. So we're seeing more young farmers enter the space. And I think they are lacking, really one thing, which is capital, to actually, make the investments in these new systems and kind of scale up regenerative in a fashion that, we think is going to have a big impact on their profitability over time, and therefore also the rural economies that they're supporting.
That's where I wanted to kind of wrap up with is the farmer and how you engage with the farmer. Can you maybe walk us through, like, how does this work? Are you mentioned just, kind of young up and coming farmers that require capital to kind of build a farm business? Are you also going to kind of existing legacy farmers that are transitioning, that are looking for, liquidity? Like, talk us through the different use cases of how you actually interact with the farmer and actually why this model works for them.
Yeah. So the experience that we've had, in sort of the acquisitions that we've made, at Agriculture Capital over the course of the last 12 years has been largely families, basically getting to a point where, they no longer, they want to retire. They no longer want to farm, and their kids are not interested in participating. And so they've been looking for someone to come in and actually buy the farm. One of the things they've really cared about, without exception, has been who's doing that and how's it going to be farmed, which I think is really interesting, right? Farmland is a legacy for every family who's touched that ground. And I think we respect that and realize that, we want to make sure people know, like, we're coming in to do this. This is how we see farming. We think, the opportunity around regenerative transitions are meaningful. We want to create good jobs. We want to create more income in these communities. That's why we're driving the change. I'm also, quite clear from my time, particularly at Nyman Ranch, where I was spending a lot of time nurturing and developing these relationships with farmers throughout the Midwest, principally, that farmers expect to get paid for outcomes, and they're not typically going to try to tell someone else what to do. So we don't want to be telling people what to do either. Like, we want to come into those relationships and be open to and be as good listeners as we can. Is it going to work for everybody? Maybe not. Maybe the lease structure that we were thinking about needs to be changed or morphed, or maybe it just doesn't work for that farm or that farmer, given the nature of their business. I'm absolutely that is going to happen in many conversations. I think, like good farmers, want to be really good listeners and understand when somebody says they're thinking about regenerative, what does that mean? And then figure out, how can we help drive that change? How can we help you do that with less risk, or in shorter amount of time? And that's going to be through really the contribution of data and experience that we've gotten from what we've done historically, as well as what we've learned from working with other farmers in similar cropping systems or geographies. And so I think that idea of being open to we don't have a playbook like somebody's got to be under 35 and have done X, Y, or Z before we're going to talk to them. We really want people who are certainly committed to the idea of regenerative, and have some experience having made that transition before, but also are looking to embrace ways to expand on that experience and have a bigger impact on more land. And ultimately, that's what we're interested in doing, is helping them with that effort to get access to that land and put in place a very long-term lease so they can continue to be the beneficiary of that transition for many years to come. The 10-year fund structure, by the way, that we've had historically is not a good, and I think this is the other thing that investors, Tim, to your question, that investors have realized, that's really not a good fit for farmland. Because, at the end of the 10 years, where are you going to be in that crop cycle? It might be great. You could be on the upswing and things are looking great and you get lucky.
Yeah,
maybe
you don't,
not.
you don't want to be forced to sell at the end of a 10-year fund when farmland is depressed. If you hold for another 2 years, it could be back up to
Exactly.
to make the fund work. So yeah, I think evergreen
Exactly.
makes sense. Yeah.
Yeah. And so that's really one of the things we also think is, some of the experience we've gotten, and it was funny because when we talked to these investors at the beginning, they were like, yeah, we agree, like a 10-year fund doesn't make sense, but that's all we do. So you're like, okay, so that was the only option. We're now really excited to be expanding the conversation to talk to, I think, investors who are more, and create a structure that is working for investors, which is, they get some access to liquidity after a certain number of years, which is helpful for them, but also, they don't have to be locked into the farmer, and our land ownership is not locked into a particular exit time frame. So that changes a lot in terms of how successful we think those operations are going to be, and the fund will be over the course of a future, who knows how long it'll be, hopefully hundreds of years.
Well, Rob, this has been an awesome conversation. We really appreciate you coming on. As we wrap up here, how can listeners get in touch and connect with you and everything at Ag Capital?
We have a website where we publish a lot of information, and as Tyler alluded, it's agriculturecapital.com. Very creative. And so please go there. You can also reach me at Hurlbut, HURLBUT, at agriculturecapital.com. And we've got an amazing group of folks here who, are interested in doing everything we can to try to accelerate these transitions and also give investors access to what we think is a really important investment class and transition for building wealth over time. So, thank you guys for inviting me today, and look forward to continuing the conversation.
Hope you guys enjoyed that conversation with Rob, all about investing in farmland. Guys, we have 2 months left of the year. Tim and I are going to be pivoting a little bit with the content of the podcast just over the last few months of the year, focused a little bit more on solo episodes, I guess, or duo episodes. So Tim and I are going to be having more conversations about what's happening in agriculture, in ag tech, in investing, and fundraising. all of the above. And we'd really love to hear your feedback on it. Do you guys like when Tim and I run solo and deep dive certain topics, or do you like the guests and hearing other people like Rob and giving great insight on the industry? And maybe it's both, but we'd love to get your feedback. It really helps us figure out how to take the show, and getting your feedback would be awesome. And just ideas of what do you want to hear from us is super helpful. Reach out to us on LinkedIn is probably the best way to get in touch with us. Our LinkedIn profiles are linked in the show notes, and just shoot us a message. We'd love to connect with you and just hear what you're up to, what you're working on, what you're building in agriculture, and your ideas for what you'd like to hear from us on the Modern Acre podcast. We appreciate you. We appreciate you guys listening. We'll talk to you next week.